We are here with the Loan Ninja, and he is gonna, not the loan, like the only one, but
like
the
he's alone?
LOAN
Okay.
Loan Ninja, like the guy who makes mortgages.
So he's not alone.
We're gonna talk to him today, and we're gonna find out what the heck is going on, because everybody's freaking out over this market, and they just don't know what to do. So I believe we have him on the phone right now. The engineer is telling me he's here. His real name is Caleb. Caleb, why don't you tell us who you are?
All right. So my name's Caleb Corsair. I'm with Home First Lending. We are a mortgage broker here in Central Florida. We have several locations throughout the Southeast United States, and I am in my 11th year with Home First.
Wow.
Yeah, but I heard you were a loan ninja.
You're by yourself.
That's what Instagram says, so that's what I go with.
Oh, okay. So you let them label you. Good for you.
Free marketing.
Wait, why is it ninja? I don't understand.
Yeah, why? I know why he's a ninja.
Why?
Because he can get stuff done that other people can't. He's like, I can do it.
It's fast.
That's right, stealthily.
Yeah, he wants.
Stealthily.
Listen, when the mortgage or the loan is impossible, this guy still can't get it done. But if it's a little, if it's not quite impossible, but it's really hard, I'll bet you he can do it.
That's it.
That's not
Is
how
that
it
it?
goes.
That's it. Nailed it.
I know. Because when it's impossible, forget it. Like if the house doesn't appraise,
Right.
it's not getting done.
Your credit's
when
at
the guy has
400.
no money, no credit, just had a foreclosure or bankruptcy, he's not getting a house. Is that right? Are we getting this right, Loan Ninja?
That's true. That's 100% correct there.
All right,
Only
so
so much I can do.
Only so much anybody can do.
That's true.
All right, so everybody is freaking out. And when I say everybody, I mean pretty much all the real estate agents on all the Facebook groups and all the social media freaking out because the market has seemed to become, I don't want to say dead, but it's dead.
What? It's like it's stagnant.
It's
right?
drop dead.
It's stagnant.
Well, according to the people on social media, it is completely drop dead.
It's been destroyed.
Closings are still happening. Like I'm seeing closings happening in certain markets. Certain markets are still getting plenty of closings, but stuff is hanging out there. 45 days, 60 days, 90 days on the market, not moving. Tons of price drops. We're seeing that too.
But wasn't that like that before the inflation? Before everything just...
No. It was like there wasn't a lot of inventory, but
Right.
prices were going up.
Right.
And everything was being snapped up just like that. So like within minutes of coming on the market, the thing was gone. And now we're seeing the exact opposite of that. And I think Lone Ninja, I think Caleb, I think it's your fault. Because don't you control the interest rates?
I would blame the Fed a little bit more than me, but I guess I'm partly to blame too.
So question,
All right.
how does the Fed affect you?
Yeah, so the Fed, they control the benchmark interest rate or the overnight rate. Really, it's the bank-to-bank rate. And so it doesn't have a direct correlation with mortgage rates like a lot of people think that does. It impacts like credit card and HELOC rates a little bit more than mortgage rates. But it does have an indirect correlation. You know, if they're raising the benchmark rate, everything in general becomes a little more expensive, including mortgage rates. Those investors have to chase a higher yield for it to actually be worth their time. So with the benchmark rate going up, we've seen mortgage rates move up throughout the year as well.
Yeah, the bond market, the 10-year Treasury is where it's at. So if people can put their money, people have a choice of where to put their money. They can put their money in something safe that gets them 3.5%, or in something a little less safe that gets them 3.5%. They're going to go with the really, really safe one. Or if they can get 4% or 4.5% or 5% in bonds and it's totally safe, they're going to do that. So that's going to affect the mortgage price because there's going to be less money available.
So then how does that affect the agent? Caleb, have you been seeing any particular trends between them, or is there a slowdown in your neck of the woods? How does that work?
Yeah, so it's not just us, it's really across the board. So nationwide, refinance applications are down about 86%. Purchase applications are down about 45%. So there really isn't any of us that hasn't been impacted. We've definitely seen a big slowdown.
Oh, 45%. We're seeing 45% less closings, or we're seeing 45% less mortgages because, like, I think I heard 40% of all closings were cash. deals. But just because they were cash deals doesn't mean they were actual cash deals, because a lot of people buy with cash because they took a HELOC out of their home and bought a second home, and that's where they got the cash.
Oh.
Right? So if 60% of the market's buying with mortgages and it's down 45%, does anybody know what that is? Anybody? Somebody
My brain
figure that
exploded.
out in math and put it down in the comments for us, because we're just not that good. But that's huge to see that kind of nationwide issue. Are you specific to one state, or do you lend in a whole bunch of states?
So we're currently licensed in 12 states, but the Loan Ninja is only in Florida. for the
Okay,
time
so
being.
Because it's a loan.
yeah. Well, what are you seeing in Florida? Is it different, or is it fitting in with the nationwide average?
We've definitely seen a big slowdown in our area as well. Like you said, there's still closings. People are still applying for mortgages, but it definitely has slowed down. Like you said, homes are sitting on the market a lot longer than they were 6 to 12 months ago. We do feel that we will fare a little bit better than a lot of other states because Florida is so desirable, no state tax, great weather. So we're still seeing a lot of people from up north and even from other countries moving to Florida.
Oh.
So I don't really think that we'll be as impacted moving forward as some of the other states.
So we're not having the 45% drop?
Yeah, we're probably around there. So I know that my personal volume is down about 40%, and our company as a whole is down about 40%. So we're right there.
But wait a minute. Your volume included purchases and refis. And there's no reason for somebody who refied at 3%, unless they totally need money, to refi now at, what is it today? 6.5%?
Yeah, we're in the low sixes on a 30-year conventional loan right now.
Okay, we were in the low 7s, so we're a point down from the high. That's
Exactly.
actually pretty good. So you've seen it pick up since it went from 7 to 6, right?
Exactly. Yep. So the latest inflation report was favorable, showed that inflation numbers are starting to come down. Higher inflation numbers is what's pushed interest rates up. And so as those inflation numbers come down, we will see mortgage rates follow. So yes, it has gone a little bit better over the last 30, 45 days, and we do expect the trend to continue over the next quarter or two.
Okay, but so now let's get back to your volume. If your volume is a mixture of refis and purchases, are you seeing purchases down 45%?
Yeah, approximately. So we've always been very purchase heavy. A lot of banks, they focused heavily on refinances, but we've always focused on purchases. And even purchases in our area, they're way down from 6 to 12
I was
months
so
ago.
hoping you were going to say, no, Dawn, I'm only down 20%
wish I
on
could.
purchases because I'm down 100% on refis. But
wish I
no, you gave me that same crappy 45% number. Nobody wants to hear that. Like our audience
All
does
the
not want to
buyers are
hear
on the
that.
sidelines.
The buyer's what?
How much of this is December? Come on, tell me that in January we're going to see something better. Help me out here. I need some good news. I need some hope. Hope's my middle name. It actually is. But I really need some hope.
Yeah.
Give me something.
Well, that's a good point too. That's often overlooked. Is especially in our market, the fall and winter it always slows down. So spring, summer it always picks up. And so when you combine that with the rising rates this year, a lot of buyers have kind of been on the sidelines, wait to see how the dust settles. So we do expect things to be pretty robust in the spring and summer.
Oh.
So this might be that perfect lull in activity to get a good deal on a property.
Well, wait. If things you think are going to get better in January, you probably know. Well, I think here's what I think is going on, and you tell me if you think you agree on this. But what I think is happening is the sellers haven't gotten the message that prices need to come down if they actually want to sell. That's happening.
Yes.
Then there's people,
agree with
right?
that.
So
I
so
agree.
the sellers are totally out of touch with the buyers. The
Yes.
buyers are like, I can no longer afford your home because
But
the
that's the
mortgage
agent.
price is double. No, it's not the agent. Always the agent. The sellers have been conditioned right now for the last year and a half.
That's true.
Of I'm going to put my house on the market,
Yeah.
and within 10 minutes I'm going to get 47 over ask offers, and my house is going to close in 10 days cash, even though it's a total fixer-upper and has mold everywhere. I mean, they're out of reality, and they need to come back down to reality. And there's those sellers, and then there's the sellers who refied at 3% and don't have to move. They're good.
Yeah.
They're like, you know what?
I don't
I
need to do
wanted
anything.
to sell, but I got screwed over by the rates, and I got screwed over by the market, so I'll just sit here and wait until, things look better for me. And so we're still not seeing a lot of inventory. We're still seeing too many overpriced houses that aren't worth what people are asking. We're seeing agents a little bit at fault, by taking the overpriced listings, by not giving the right comps to the sellers, by not bringing the reality check to the sellers?
Well, and that's my question. Caleb, how much do you have influence on, do you talk directly to the agent, or do you talk directly to the person purchasing?
So we're in communication with both of them. We meet with several large real estate teams in our area. We, of course, have several conversations directly with the consumers throughout the process as well. So really, we feel that education is important. Like you alluded to, there's a lot of misinformation out there. A lot of agents are tickling their ears because they're afraid to lose a listing. So we do see that the market's starting to catch up a little bit. We're seeing more price reductions. We're seeing inventory levels increase. We're seeing sellers covering closing costs, things of that nature. But it has been a slow process for sellers to come to grips with the fact that you can't just expect $50,000 over list price, no contingencies. That market's gone.
Yep. Ship has sailed.
You heard it here first.
Yeah, or not. All right, one more. So, all right, let's get to this. This is the meat of it here.
Oh.
How many people are coming to you trying to get pre-qualified because they plan on buying in January?
Oh.
That's what I got to know.
Yeah,
Anybody?
so there's quite a few. We've seen a lot more recently that are kind of planning for the future. I think a lot of people are trying to time the market, and they feel that prices are going to drop a little bit more, interest rates are going to come down. And that's kind of a dangerous game because, if you wait until the shoe falls, everybody's going to rush back in. So it's kind of a delicate matter. We do see purchase applications picking up, and a lot more buyers are coming to grips with, hey, a 5-6% mortgage rate, that's not the end of the world, and I can always refinance later if I need to.
Well, that's that. What real estate agents have been saying, date the rate, marry the house, date the rate, which I so hate that. I like actually cringe that I just said it out loud, because that's what all the real estate agents have been saying, date the rate.
Isn't that?
Which, if you say it too fast, doesn't sound really good.
No, it's not. It's not.
But you know what? Dating the rate is the oldest trick in the book. I mean,
What does that mean?
It means buy now, refi later. And Florida has this thing called a 2-1 buy down, where you can get a 2-point buy down on the rate for the first year and then 1 point for the second. And by the third year, by then they'll have broken the economy and interest rates will be back in the
So
fours.
you're hoping
It's a gamble.
Ooh.
It's a huge gamble. Can you tell us about the 2-1 buy down? Are you doing that there? Are a lot of people asking for that?
Yeah, so we're a full-service broker. We have over 50 different investors, and a handful of our lenders are offering the 2-1 buy down now. I personally think it's a fantastic product. I've closed several of them already. And like you said, to get 2% off of the going rate for the first year, 1% off the second year, very likely will have refinanced within the next 12 to 24 months. So I think it's a great opportunity for those that can get the seller to cover that cost for them.
So the seller's paying for the buy down?
Yes.
How much does it cost them?
So it depends on several factors like their credit score and the loan amount, but it's generally right around 2% of the purchase price.
Back it up.
The loan amount.
The seller's paying, but it's based on the buyer's credit.
Yes. So the actual cost, because the cost is tied to the interest rate that the buyer qualifies for. So like if they have lower credit scores, their rate would be a little bit higher. They would need a slightly larger credit to cover it. But for the most part, it's right around 2% credit that they would need from the seller to cover that.
2% sale price or mortgage amount?
Purchase price.
Ooh. How much were they putting down for these? What are we doing there? We're talking like 3% down, 5% down, 20% down? What are we talking?
Yeah, so it doesn't impact the down payment. So if they were doing a conventional loan with 3 or 5% down, they can still do that. And then the seller credit would just cover the cost for the temporary buy down.
Yeah.
One of the cool things with that, though, is that with the temporary buy down, if you sell or refinance within the first 24 months, that unused portion you get back as a credit off of your payoff. So if you just pay standard discount points, that money's gone after you close. With the temporary buy down, it's able to be recovered.
Really? That's extremely interesting. And actually, I kind of like it. I like it. I think if I was going to buy a house right now, I would do that. How many of the sellers are willing to pay that 2%?
A lot more than 6 to 12 months ago. So
okay. What percentage do you think?
In our market, I would say about 40% of sellers are willing to offer a seller credit.
Okay. So I've been seeing a lot of agents asking a lot of questions online on the social groups. And the big thing they're asking is they're saying, oh, I'm offering a credit and I've got the house priced at this, and I've been on 30 days, 45 days, 90 days, still no offers, no calls, nothing. And my advice to them, because I always give advice to these guys, whether they ask for it or not, is I tell them, I say, you're better off lowering the price and ditching the credit, except on that Buydown thing. That actually could be worth more than lowering the price. Because the reason is because people who buy with 3% down or 5% down, they don't have $300,000. They don't have $500,000. They've got $2,000 a month to spend on housing costs. They got $2,500 a month. They have $3,000 to spend on housing costs. So that's the way that they figure it, because they don't think they're ever going to pay that $300,000 off. They're just going to hope that the price goes up and they can sell it for more later, or that they have a place to live that they can afford that isn't a rental that they own. So they don't have to worry about rising rents or their landlord, wanting the property back and evicting them. So that's why people like to own property. But I mean, really, if you're not paying cash, like you want to go out and you want to buy a house right now.
As an investor, you're right.
As a homeowner, as a first-time home buyer who's got to either rent or purchase.
Right.
They have the same amount of money to spend each month on housing costs. So what they prefer to do, and what they should be doing, is buy for that monthly amount instead of rent for that monthly amount. So
that's how it goes, though.
But if rent comes way down,
right,
people are going to rent instead of buy. But rents are high right now.
Right.
So people are looking at
are the mortgages comparable?
Not the best choice.
So here's what grinds my gears, and I don't know, Caleb, if you have any advice or 2 cents for this, but okay. So for instance, as an example, my rent is $2,000 a year, but I don't qualify.
You wish it was $2,000 a year. I wish it was $2,000 a year.
Oops, faux pas. Okay, so it's $2,000 a month, but I don't qualify for that exact same amount in a mortgage. Wait a minute. There's new underwriting standards. Caleb, tell us about the new underwriting standards that do take rental payments into account towards a purchaser's credit. Do you know what I'm talking about? Because I've seen that lately.
Yeah, so there are some programs that would factor that in more heavily than previously. With the bulk of our investors, it's still pretty standard debt ratios. So like with an FHA loan, you can go up to 57% on the back end, conventional up to 50%. So we do look at that. Positive rental history is definitely a compensating factor. So underwriters like to see that, and then they can let you stretch your debt ratios a little bit more if you have been paying your rent on time versus somebody who hasn't.
So the problem is, Nicole, not the $2,000 mortgage payment.
Right.
The problem is,
and
the reason that you wouldn't that you're saying that you don't qualify is you'd qualify for $2,000 at a 57% ratio, but you can't just count the mortgage payment. You've got to pay the taxes, homeowners insurance, HOA costs, if any, and that's all called your monthly housing cost. So you have to add all that up together, and that's unfortunately that because of taxes being in Florida, they're about 2% of the sale price. And then you divide that by 12.
Right.
You've got to pay an extra $500 in taxes, and now you've got a $5,000 a year homeowner's insurance bill because of all the hurricanes. So all of those things pump up the monthly cost, and that's why you can't equate it. Is because all the other costs that are involved. So,
have you had any recent, maybe within the last couple of years, agents that you've come across that maybe it's a weird, bizarre, strange encounter, or like just the agent from hell?
Yeah, tell us about the agent from hell. We all want to know. Come on. You
so
got one.
All of the top producing agents, they come with their fair share of headaches. They deserve the best. They deserve 24/7 service, and so I get that.
Garcon.
I had a more unique buyer situation recently that'd probably be more interesting for you.
Yeah, let's hear
it. I want to hear it. Come on, let's go. Don't out him. No, out him. Come on, let's go.
All right. And I apologize if my dog's barking. The pool guy's here. But I closed a loan for a buyer about 5 years ago, and then last week I got an email out of the blue, and he said, "Hey Caleb, I hope you're doing well. Happy holidays. One of my family members burned my house down to the they burned my house to the ground, and they're trying to collect the insurance money." He's like, "I've been homeless for the last 6 months, couch to couch." He's like, this is an awful ordeal.
Wait,
so
the family members trying to get it?
Wait a
Yeah,
second.
that's what he claims.
A wife trying to leave?
Oh,
He didn't specify which family member.
Come on, you know it's a wife trying to leave. It has to be somebody on the deed to get the insurance money.
oh, is that how that works?
I hear it's the mother-in-law, but
Wait, was she? How would she be a beneficiary of the insurance?
I don't know. Maybe if somebody died, in
Was
it? I don't
she
know.
a part owner?
That's just weird. Oh my god.
I think she tricked him into a quitclaim deed, put herself on there, and then is trying to get the insurance money.
Oh, drama.
Oh, that's
Yeah.
jail time right there.
Oh,
That's
Yeah.
big. Why would anybody try that?
So then wait,
So
what do you
first
do?
You've got deed and mortgage fraud. Deed. So you have
I
property.
mean, allegedly. We don't know if this
Allegedly.
is. Yeah.
We're not naming the person. We don't know their name. This is just a fun story. I mean, not a fun story. This
It's
is
terrible.
This is a cautionary tale, is what we're talking about right here.
She's so not excited about this, guys. It's just not happening.
I can't
That blows
know
my
what
mind.
people are thinking when they do dumb crap.
Oh, you wanted to say it. She wants to say
they
it.
do dumb shit all the time. I have no idea why people do that crap.
I knew you were going to say that. Oh man. So what did you have to? What did he want from you? He just wanted to.
I guess he just wanted to wish me happy holidays and let me know how things are going with his life. And
Nice.
I told him that's a little bit outside of my realm.
Wait, he didn't want to couch surf at your house?
That's not my.
He hasn't asked that yet, but I mean, my house is open to him, so we'll see.
Oh, don't.
I don't even know what to say here.
That's beyond my pay
Let's go
grade.
back and hear the agent from hell story without telling. Wait, will this get you in trouble with an agent from hell if you tell us an agent from hell story?
Yeah, probably.
Okay, so
All right,
you're
so-
going to skip that.
Yeah. Let's go to the next question.
Well, don't you have a friend who's a mortgage
Yes,
broker?
yes.
Who has an agent from hell story that
friend.
you can tell us
A friend allegedly.
about? Asking for a friend.
It's not gonna work.
Everyone does that on Facebook. They put out this like huge thing,
Here, let me-
and at the bottom they go,
I'm gonna cut this out.
asking for a friend.
Hey, have you heard of any stories?
Oh, me?
Yeah. Sure.
Oh,
We want to know.
think
We
we-
want to know what you heard of, not
What-
that happened to you directly
Right.
or anyone you work with directly.
Exactly.
We would
No,
never ask
not-
for that.
Nothing too crazy. The main thing is they just think that everything's our fault. So when the
It is.
appraisal comes in low, when the appraiser doesn't show up on time, they'll call me at 10 p.m. asking me what happened as if I dropped the ball. So
I'm an appraiser. I'm telling you, it's your fault.
Yeah.
I'm
It's always our
serious.
fault.
I'm an appraiser, and if I didn't get there because I was busy getting a pedicure and it ran long,
yeah.
It's
your
Low
fault.
ninjas.
you didn't.
Yeah, didn't appraise, your fault. No comps, your
Yeah.
fault.
No.
Title company didn't print the closing package, my fault.
In
It's always our
your
fault.
in your position, let's say, what would you invest in? You personally, I'm just curious, as somebody who's immersed in the world of loans and refi and purchases.
Are you talking? You're asking him real
Yeah,
estate,
I'm
right?
asking him.
What kind of real estate?
Just investment. Yeah, opportunities. What would you specifically?
Where's he parking his money? Is that what you're asking him?
I'm not. I mean, I don't need to know your bank account statement, but
I'll send you the statement after
Thank
the
you.
show.
I
She does want to
appreciate
know
it.
if you're single.
no, he's not. He's married.
I'm not single, unfortunately.
All right, then she doesn't need your
Unfortunately.
financial information.
No,
Move
I was
along.
curious. I was curious if somebody with his knowledge, what would he invest in? What would be something that would be,
Yeah, lay it on us.
Have your golden
Where are you
eye.
putting your money?
Yeah, the whole short-term fix and flip, that's not really something that would appeal to me right now. I think it's a little bit too volatile for that still, maybe in a few more months. I like Airbnbs, so we just acquired one in South Georgia. We fixed that up. We have it on Airbnb. I'll send you the link so you can promote it. I think Airbnbs
Put it up on the screen.
yeah, put that on there. But I think an Airbnb in the right location is a cash cow, in my opinion.
Yeah, and Caleb's Airbnb that he wants to rent out, link in bio. So don't forget to leave us a
Message me for
comment
5% off.
and a like and.
what did
click
you
the
say?
link.
Wait. He said 25% off?
5 to 7% off. We'll work something out.
5 to 7% off.
Big whoop. Off of what?
Wait, what are your cleaning
Wait,
costs?
and are we talking about hurricane season or the good season? What are we
We'll
talking
work
about? Where's the
something out.
discount?
No, he's in
You're
Georgia.
VIP.
You're
25%.
All right, we'll do it on location. There you go.
25%
Oh, I
off the
like that.
made-up cost. I love it.
On location with Caleb. I don't know.
In his
what's your-
Georgia-
Corsair?
There you go.
Yeah.
Georgia, yeah. It's
In
not
his
hurricane.
Georgia, why did you buy an Airbnb in Georgia if you're in Orlando? You in Orlando?
We wanted somewhere that was a nice little getaway from us. So, Central Florida is so busy, all the hustle and bustle To get 3 or 4 acres in Florida would cost me an arm and a leg. So
Yes.
Where in
Southeast
Georgia?
Georgia is reasonable.
By like Savannah area?
It's about 45 minutes south of Savannah.
Oh, it's like right on the Florida border.
So you can enjoy
Exactly.
the, the quiet, but also, well, I mean, I don't know. I don't
And it's
know
like,
the
what, a
location.
3-hour ride from where you are?
Exactly,
So-
right at 3 hours.
What'd you do? You hire someone to manage it? Because if it's 3 hours away, you're not managing that thing.
Yeah, so we have a property manager and somebody who takes care of the lawn and cleaning company. As far as like the actual bookings through Airbnb and Vrbo, I just manage those. It's not too difficult when you only
Right.
have 1 or 2. But yeah, we do have somebody that lives close.
See?
All right, so I
Solid.
got to ask you a question on the Airbnb thing now. How'd you find the property manager? Is it someone you knew, like someone you work with?
Yeah, so with the property that we acquired, there was a lot of work that we wanted to do to it. So like we built a pool, we remodeled the house. So with those contractors, we were constantly asking for referrals, and that's how we found everybody: the lawn guy, the property manager, the cleaning crew. So we always feel going to somebody who knows somebody local is best.
Somebody
Okay,
who
so
knows
the property manager who's managing your Airbnb right now, are they a licensed real estate agent or broker?
Oh,
No.
What? All right, listen, the reason I'm going to tell you this is because our audience is real estate agents and brokers. And I constantly keep hammering to them, hey guys, I hate saying the hey guys.
Yeah.
Erase that.
folks,
Cut that part out. When,
peoples,
yeah, no,
individuals,
listen up.
Homo sapiens.
Start managing properties. You'll get paid when the market's slow.
Oh,
But
residual.
who buys and sells? Come on, who buys more? Some people buy a home and sit in it for 20 years,
Right.
but investors buy and sell a couple properties a year or more.
Okay.
So if you're managing property and you were recommended and you're doing a good job managing their Airbnb, when they want to buy another one or sell one, now you're their agent.
Smart.
All right, so you're getting paid along the way. You're not sitting there going, "Oh my God, I got to drive Uber because I haven't had a closing this month." And manage property. It just makes sense. It all goes together,
All right. So
and it's how
final-
you get clients.
That's true. That's true. Final, just to recap, you said you feel in the spring things are going to pick up, correct? Buyer's market?
Yes. Yeah. Yeah.
When you said buyer's market generally means the market's pretty slow.
Oh,
So let me just
hang on.
find out where we're really going here. Okay, Caleb, you think it's going to pick up in the spring? I think it's going to pick up in the spring, so we're in agreement with that. I do not think it's going to go back to a seller's market. I think we're going to get a normalized market, and a normalized market is neither a buyer nor seller's market. It is a typical market where homes, believe it or not, this is the typical market. Houses are supposed to stay on the market for 3 to 6 months when marketed properly in a normal market, at least according to Fannie Mae in the appraisal forms. And, no, it is. It's true.
Really?
1 to 3 months of marketing time and days on market is a very fast market. 3 to 6 months has traditionally been a normal market, although nobody thinks of it like that anymore.
Because nobody has patience.
No, because it was so hot. And then anything on the market more than 6 months,
That's
if the majority of homes are sitting on the market for more than 6 months, you're in a dead market.
so. Then what do you offer
What do you mean? What do you offer?
in a dead market? You said it was a dead market right now.
You offer the comps minus a little. Like I believe I did a video on how to price in this market.
Yeah.
And you go out and you pull the comps. Those comps sold within the last 6 months or so. So they're a little behind, lagging behind. You figure out what the percentage of decline is on a per month basis.
Okay.
So if it's 1% a month and the last comp sold a month ago, you take that comp, you adjust it out, and then you subtract the 1%
Okay.
for the declining market
1%.
or whatever it is.
Yeah. All right.
If it's a 10%, then you subtract 10%.
And if they really want to sell,
It depends on the market because remember, markets are local.
Right.
So we can't go by, a blanket statement for all markets. What we have to do is we have to look at our local market. We have to say, is our local market staying the same? Is it rising or is it declining? Is there an oversupply? So what we do is we look at it. How many sales have there been in the last 6 months? There have been 100 sales in this zip code in the last 6 months. How many active listings are there right now? There's 100 active listings. That's called 6 months of supply.
That's
If there's
fair.
only 50, then we only have 3 months of supply.
Got it. Okay.
So, right, because this market wants to absorb 100 houses in that time period, but we don't have 100 houses to absorb. So that's how that
I
works.
thought you were going to say the market absorbs your soul, and it kind
It
of does.
does.
A little piece
It
of me died.
does.
Caleb, do you have anything that you'd like to bring up?
Well, I think that she made a great point there, because everybody's freaking out now because things slowed down so drastically, but this was a necessary evil. The market was way overheated the last year or two. It was complete insanity. First-time buyers, FHA buyers, VA buyers, they had no chance of getting a home at a reasonable price. So we had to have things settle down a little bit. And like she said, this is a more normal market than it was the last 12 to 24 months. So yes, it's been a little bit painful for all of us, but it was needed to get things back in line. And we do expect things to continue to improve over the next 6 to 12 months.
Balance out. So you don't think
Totally
there's going to be
agree.
like a crash or nothing, right?
There's no reason to suspect that based off of the data in our area.
But
That was an excellent
go
answer.
get your magic 8 ball, because nobody's got nobody's got a crystal ball.
Yes.
Anything could happen.
I have one.
That's true.
You
I
do
have one
a
in
crystal ball.
in my office.
Nicole's going to bust out the crystal ball. We're going to ask the magic 8 ball what's going to happen in the future, and then we're all going to bet all of our money on what Nicole's magic 8 ball and Caleb just told us.
We should go to the horse track.
We should not. Everybody, we are with the Lone Ninja, and we are so happy that you came in to talk to Nicole and I on this GHTV show. So once again, give us all your information so people know how to contact you, how to get in touch with you, and we'll put some info up on the screen here.
Yeah, absolutely. So my direct line, you can call or text me anytime, 407-705-2989. My email, Caleb, C-A-L-E-B, at myhomefirst.com. First, the number 1ST, so we can blast that up there. Hopefully on Instagram, I'm lone_ninja. Connect with me, follow me. I'll definitely follow you back. And our company website is myhomefirst.com.
Well, you heard it here first. He said he definitely will follow you back.
So if you're looking for an Instagram and or Twitter follower, follow him.
Yes.
Just to get one back.
He'll scratch
That's how
yours.
it works.
Exactly.
Caleb, thanks so much for coming into GHTV today. This was great talking to you, and I wish you best of luck in the spring.
Thank you so much. Appreciate you
Thank
having
you.
me.
Take care. Thank you so much for watching here at GHTV. And if you're a real estate agent, you want to follow us here, we have great advice and tips for you on the Go Home TV channel. And also check us out. Check out MyStateMLS, the nationwide multiple listing service. Don't forget to like and subscribe to this video, and we'll see you next time.